Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Hilliard MacBeth, author of the book When the Bubble Burst, Surviving the Canadian Real Estate Crash. He has his second edition out. He's also a portfolio manager and financial advisor in Edmonton. Welcome back to the show, Hilliard.
Nice to be back on your show, and I'm just back in Canada from 3 weeks in warm climate in Mexico, and it was minus 29 this morning when I took the dog for a walk, so that was a shock.
Welcome back to Canada.
Yeah.
Vancouver's in that group too. We've had a couple of snowstorms, and it's pretty cool and brisk here for the West Coast.
I grew up as a young child in Vancouver for 9 years, I think, and I only remember one time it snowed, and we made a snowman. We were so excited, and by the next day it entirely melted. So nowadays, Vancouver seems to get snow fairly regularly.
Oh, well, the good thing is the snow removal service rain always shows up a day or two later. And so it's pretty here, and people do not have winter tires, and driving is a real adventure. Hilliard, the Terranet housing index came out today. They say prices are down 0.1% across the country. How accurate is that?
So there's a couple of things to know about that. So it's really the only index that tries to compare apples to apples. So what they do is they take the prices when they're registered at land titles office, which is a lag of about 3 months compared to sales as recorded on MLS. So that's one thing to know. Second thing is they try to find paired sales. So actually the same house sold like 5 years ago, and then today it sold again. And then they try to adjust for renovations or any kind of improvements that are made. I don't know how successful they are at that. So it should be a little bit more accurate than the Canadian Real Estate Association, the CREA, which is the other main index that is published. But the Terranet index operates with a 3-month lag. So you're really looking at least a 3-month lag. Actually, it's a little bit more than that because they also take the last 3 months and they average them. So they instead of, I don't know why they do that, but they take the average of 3 months and they report that. So it's a very slow moving index. I think they wanted to take out the sudden jumps and drops, but so in any case, they're sort of telling us what was happening maybe back in October, November, with this latest report. But I was interested to see that although the national index was basically unchanged, Toronto was up a little bit year over year. Edmonton and Calgary were actually some of the worst performers, which intuitively you'd think that wouldn't be the case because Edmonton and Calgary have gone through basically 10 years or longer of a weak housing market. You'd think that they would be less likely to get hit by big drops, but at the moment they are, and of course that's because of the weak economy in Alberta with oil exports in trouble and that sort of thing. But the big overpriced markets are still in Toronto and Vancouver, and the problem there is we're not seeing the real information, especially in Vancouver, because single-family homes in Vancouver peaked more than 2 years ago in the summer of 2016, but the index was clouded by condos, which kept rising. Now both condos and single-family homes in Vancouver have rolled over. But the expensive homes in West Van and the western part of Vancouver, in some cases, are down 15-20%. But the index doesn't show that yet. But it will come, and the same in Toronto as well.
Well, Steve Soretsky, local real estate agent we talk to on a regular basis, says this is the worst real estate market Vancouver has seen in 30 years.
Yes, that's exactly right. And I've talked to Steve several times. He's a really knowledgeable person and doesn't have the usual biases of some of the realtors that I've talked to. But yeah, it was in the mid '80s, the early '80s, the last time it was this bad. And of course, that's where that myth developed in Vancouver, that Vancouver real estate never goes down because you've got foreign buyers coming in, you've got immigration, you're squeezed between the sea and the mountains, and there's no land, and all those things which contributed to the myth that Vancouver can't have a correction, but it is having a correction, and it'll probably be a pretty severe one, because really, when you get right down to it, I mean, I'm watching. Actually, there's a couple of people on Twitter. It's quite interesting. If people want to follow me on Twitter, then they'll see other people on Twitter that report these houses as when they last sold and how much they sold for, and how much the people trying to sell them now have dropped the listing price. And some of the changes are I was just reading about one this morning. Somebody dropped their price by $200,000 after 8 days on the market. So that tells you, I mean, most people, they pick a price, they're going to stick to it for 2 or 3 months to see if there's any interest. For some reason, the seller changed his mind 8 days later and dropped it by $200,000, and it's still not selling. So that tells you there's some pretty desperate sellers. But the numbers are ridiculous. Like, you're talking about $2 and $3 and $4 million homes where people are trying to sell them, and they're just, if you take away the foreign buyer, mostly from China, and you take away the speculative buyer who's willing to kind of risk everything, if you remove those two groups, there really aren't that many people that can actually afford a $2 or $3 or $4 million home. I'm sure of that because I've been a financial advisor for more than 40 years in a very high income market, which is Alberta. And when I think back over my clients who tend to have higher incomes and higher net worth, there just aren't that many that ever bought a $2 or $3 or $4 million home. It's just not that common. So when there's thousands for sale, as there are right now in Vancouver, in that category, it's really a scary scenario because if there's no buyers and people are desperate to sell, it could push prices really low for a while. Of course, it'll be temporary if they drop precipitously, but it won't last forever. But it could last for a year or two.
Well, the NDP government's certainly done their best to throw cold water on the market with their 20% foreign buyer tax and their speculation tax if you happen to own a second home.
Yeah, a lot of Albertans are really struggling with what to do because they are actually, maybe not so much in Vancouver, but in some of the other parts of BC that are affected by that vacancy tax. They're really struggling with what to do because they don't really want to pay the tax if they're sitting on some place they don't use more than a couple of weeks a year or a month a year or whatever. But they don't really want to sell either. So I've talked to many of them that, and then also I guess there's some loopholes or some ways to get around it. I don't understand all the details, but some of that gets quite complicated too. So, yeah, it's having a big impact in BC. And so Alberta's weak because of the economy. BC's weak because of, the disappearance of the speculators and the foreign buyers and some government taxes that they put on. It seems like every region, and Toronto's got different reasons why their house prices peaked, more recently. They peaked in 2017, so just 2 years ago versus 3 years ago in, Vancouver. And, only in certain areas of Toronto have we seen, big drops. Most of the parts of Toronto, especially the city of Toronto, not the greater Toronto area, the prices have held pretty well. But they'll come down to, there's a tremendous amount of supply coming in the multifamily in Toronto. It's the biggest number of cranes on the horizon of any city in North America, including obviously New York and cities that are much larger. So the supply will have a big impact on Toronto. But so far, Vancouver and Alberta are the kind of the epicenter of the correction so far.
We'll have more with Hilliard MacBeth right after this.
I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
Welcome back. We're speaking with Hilliard MacBeth. Hilliard, Australia. What's happening with the real estate market there, and is it kind of a foretelling tale of what could happen here in Canada?
Yeah, I think it is. It is telling us, it's giving us a signal as to where we're headed, but it's actually quite dramatic what's happening. So they actually have an even bigger bubble in terms of the price levels in Australia than what we have in Canada. Canada's got an outrageous bubble, much bigger than the U.S. bubble was before it started to correct in 2006, 2007. But Australia's bubble is even bigger. And one of the reasons Australia's bubble is so big is that for a lot of years, they had a very favorable environment for lending. So they would allow interest-only loans, which are harder to get in Canada. As much as 50% of the new mortgages written were interest only for the first 5 years. So you can imagine, if you don't have to pay any amortization on your mortgage, you just pay the interest, you can afford a much bigger mortgage. The other factor in Australia made their bubble even bigger was in 2009 when the U.S. went through a horrendous recession, and most of the rest of the world did as well. Australia didn't have a recession. They managed to skate through with no recession because of China demand for their commodities and their really strong real estate market. So people got overconfident about their real estate market. So what's happened lately is the sales, and they've got a really odd situation, which there's no comparison, there's no comparable as far as I know. They have auctions every weekend of houses, and everybody can see the bids, and everybody can see if the auction succeeds or auction fails. And so it's sort of easier to tell there what's really going on. And they have auction clearance rates that are published. And the last few months, the houses that have been put up for auction are not selling. So it becomes very apparent very quickly that there's a problem. But the big thing that came out a few days ago was the mortgage growth rate. So as people know, and as people have heard me talk about before, and you can read about in my book, the growth of mortgages is essential to the housing market and also to the economy in general, because when the GDP is growing at 3%, in Canada, mortgages were growing at 7%, and that extra 4% on top of the GDP growth rate was extra money that's been created to be put into the economy. Because when somebody takes out a mortgage, as everybody that's had one will remember, magically the money appears in their bank account. And it actually is created out of thin air. It's not, as most economists believe incorrectly, it's not in somebody's savings account and then it gets transferred to you as a mortgage. It's brand new money that's printed and put into your bank account. So the banks create 97% of all the money, and most of the money they create is for housing in the form of mortgages. So as long as that mortgage growth is a little bit faster than the GDP growth, as it has been in Canada and Australia for years, you've got that extra impetus to keep the economy growing, because the consumer and housing are big, big factors in those two countries for the economy. Well, what's happened in Canada over the last few months is the mortgage growth rate has dropped to 2 or 3%, which is too low because it's lower than the growth rate of GDP, and you need that extra credit impulse, you could call it, to keep the economy going. But what happened last week in Australia is even more dramatic. So the numbers for December came out, and they were minus 10%. Now this is, I've been trying to find out for the last couple of days, but I've just got back from 3-week holiday. I haven't had really a chance to find out. But I'm guessing, although I haven't confirmed it, that in no developed country ever has there been a negative 10% growth in mortgage rates. To give you an idea, I checked under the global financial crisis in the U.S., and for 2008 to 2009, the growth rate was minus 4%. So to get it to minus 10 in some parts of Australia, it's minus 16%. And it isn't just housing loans; it's also business loans. So that's a dramatic turnaround. And of course, their banking industry is very similar to ours. They've got 4 or 5 big banks like we do, and they're all totally wrapped up in the real estate market, as our banks are. So it's a very, very interesting. And there's another factor in Australia. Just to add one more thing that's different, and that is there were a lot of complaints about the banking industry. So the government decided to have a royal commission into the banking industry, and I think they believed when they decided to have the royal commission that it would put the complaints at rest and everybody would relax and calm down. Well, they had the royal commission. They uncovered all kinds of fraud and malfeasance, and presidents and CEOs and chief financial officers of these big banks are resigning because of it. And so what's happened, I think, is the banking industry has all of a sudden gone from being very, very generous with credit to being very, very stingy with credit. And that's how you get to minus 10%, minus 16%. But those kind of numbers mean not just a housing crash, but also a very serious recession. And now I don't know if it'll get that bad in Canada, but our plus 2% mortgage growth is not enough to sustain the housing market. It's actually not enough to sustain the economy. It won't keep us out of recession. But if we ever go to minus 2% or minus 5%, then we're talking a pretty severe recession and a very big correction in the housing market.
We'll have more with Hilliard MacBeth right after the break.
Grand Portage Resources recently completed the 2018 drill program on its 100% controlled Herbert Gold Discovery property located in the prolific Juneau Belt in southeast Alaska. Drill results are expected through late 2018. Past drill results included numerous multi-ounce gold assays on multiple veins. Grand Portage trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Hilliard MacBeth. Hilliard, how's the second version of your book, When the Bubble Burst, Surviving the Canadian Real Estate Crash, doing?
I think it's doing pretty well. I haven't talked to the publisher lately. The publisher is Dundurn, and actually the founder and main shareholder of Dundurn has just sold the company to a group of investors. So I haven't had a chance to talk to the new investors or the owner that sold, but my impression is it's doing well. And I think maybe people don't appreciate that there's some, because you see second edition or you see fully revised, and I've read books by some economists and different people where they really all they did was just add a little bit and maybe change a few things. And what I'd like people to know is even if you enjoyed the first edition, the second edition is really a whole new book. And when the publisher proposed the second edition, they said, "Oh, it'll only take you a couple months." I said, "Really?" So it ended up taking a year because I wanted to make sure that I had a bunch of new stuff that I wanted to add because of the 3 years of talking to people. I mean, I learned so much in the 3 years between the first edition and the second edition. And there's the most important parts of that I wanted to put in the book. And so I did that. But then I also added, a new chapter on Japan, a bunch of stuff on Australia. But the big thing is, I learned more about how the actual money system works in terms of what I just referred to a few minutes ago about how money is actually created. And there's still a tremendous amount of misinformation and confusion, even among central bankers, about how it actually works. And I was able to spend a week with probably the most prominent economist who understands this and has written about it, named Richard Werner in England, and then another fellow named Steve Keen, who's actually Australian, in Amsterdam. And it's pretty clear how it actually works, but mainstream economics doesn't want to change the textbooks, and they really don't want to admit how it actually works, because what really happens is it's really in the control of the commercial banks. It's not in the control of central banks. It's not in control of the government. It's in the control of the commercial banks. And when markets are rising and house prices are rising and the stock market's rising, everything goes along smoothly. But when there's a crash in the stock market or a crash in the housing market, of course, then the banks immediately get into trouble because they operate with very high leverage. And the fact that they create money means that when people stop taking out new loans and are paying back the old loans on their mortgages, it destroys money. And when money supply shrinks and money gets destroyed, it's very negative for the economy. Now, I argue in the second edition that we should change how it works so that we don't have these boom-bust cycles. But I don't know how much success I'm going to have in terms of convincing people, because there's an awful lot of people that enjoy the system the way it is and do very well. And then I guess the price we have to pay is every 10 or 15 years we have to live with one of these horrendous crashes. And it's terrible, really. But I don't know what. I would like to see more discussion about how money is really created, what the effect it has on the housing market, and why we have these huge bubbles and these huge crashes. And so I'm going to do everything I can to try and generate more discussion about it. And Richard Werner's doing it, Steve Keen's doing it, and there's a few others that are doing it as well. And of course they're very well recognized as top economists in the world. I'm a financial advisor. I'm not in their position, but if I can help them, I'd love to get the discussion going. But the mainstream economists don't want to talk about it because their models don't allow for it. So it's sort of one of those things where they don't want to talk about it because they'd have to rewrite their whole textbooks, they'd have to rewrite their whole theory, they have to rewrite the models, the mathematical models that they use, that central banks use, and it's too much upheaval for them. And of course, there's vested interest as well. So,
well, Hilliard, at one point they thought the Earth was flat too, and I'm sure they didn't want to change the textbooks then either.
You know what's interesting about that, Jim, is that 100 years ago the textbooks explained it correctly, and then Keynes came along, and then there was a reaction to Keynes, and then they started to remove it from the textbooks. So as the textbooks were rewritten, the economists went to this very mathematical type economics, which assumes equilibrium in all things at all times. And of course that's convenient because that allows all the equations to solve. And they started to eliminate references to disequilibrium, bubbles, crashes, all that sort of. Keynes talked about it a lot. In the classical economists before Keynes, that's really all they talked about was some of these things. But so they knew this 100 years ago. In fact, I think Richard Werner's paper one of his papers on this, the title is 100 Years of Lost Economics or something like that. But so it'll come back. But I would like to see it come back much more quickly, because this theoretical, unrealistic portrayal of how the economy really works is really hurting a lot of people. And we need to get to a more realistic. There's always going to be another recession. There's always going to be if there's bubbles, there's always going to be a bursting of bubbles. The fact that it isn't talked about and recognized is a very curious and interesting thing. So, anyway, so people are thinking about, well, I read the first edition. I would encourage them to read the second edition because there's a whole bunch of new stuff in there.
Hilliard, thank you so much for chatting with us.
Thank you, Jim.
My guest has been Hilliard MacBeth, author of the second version of the book, When the Bubble Burst, Surviving the Canadian Real Estate Crash. You're listening to HoweStreet.com radio. Find us on Twitter at HoweStreet, Our YouTube channel is Talk Digital Network. Questions for our guests can be emailed to info@howstreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.